boy! Peace! Hey, what's going on, yo? You guys ready? Salam, my good friend. Yeah, boy. All right. Good morning. Guten Morgen. Ba-bum-bum-bum-ba-dum. Hey, good morning, everybody. It is the 29th of December. I think we should do some Forex trading. Today we'll cover euro, dollar, gold, oil, Bitcoin. Actually, we'll cover almost anything that you want. Technical analysis, fundamental analysis, trader psychology, anything you want, because you're my sweet baby. Let's go! Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, my name is Wayne McDonald. Welcome to Forex.Today. This is a YouTube channel of 17,000 foreign exchange traders stationed around the world. Some are actually on Facebook Live. Others are on, Twitch. So welcome. Ask questions, get involved. I'll do my best to address your concerns. Been trading currencies now for what? 20 years, something like that? Pretty cool. I love it. It's good stuff. Technical, fundamental, macro, micro. There's a lot going on here. Behavioral finance. Maybe that's something if you're gonna go back to school in your 40s, maybe consider behavioral finance. I mean, who does that? Goes back to university in their 40s. It's crazy. You can't do that. So anyways, good. Thank you for being part of the community. Ask questions, get involved, take notes, document your learning experience in the comments below the videos. Treat your fellow currency traders with dignity and respect. And even though these daily webinars come to you at the cost of no money, there is a cost. Your cost is the obligation to visit tradersway.com and open up a demo account. Give them an opportunity to earn your loyalty and respect through world-class customer service, fast execution speed, low spreads, ginormous swaps, all that kind of stuff. And yes, this is the Get Rich Slow channel. You don't have to be brilliant. You don't have to have a PhD or a master's degree from an Ivy League school, but you do have to have at least half a brain and a ridiculous, sickening work ethic. And if you can do that for long periods of time, you'll be a success. That's it. That's my speech. Drop the mic. Always makes me think of the Ben Affleck speech, right? Mom, right? Mom and Dad don't like what you do. F you, Mom and Dad. You guys ever watch Boiler Room? Oh my gosh, yeah. Anyways, here we are. What did we do yesterday on this? Okay. And then, and I should make this a different color, and I should make it a little fatter. Here's today's trade plan I did for you yesterday. So let's clear this out, just so there's less lines. Delete. Let's just make this simple. What did we talk about yesterday? I said yesterday you're almost too late. Too late for what? Today. Yesterday, 24 hours ago, I said you're almost already late for the previous day, which means you can plan your day trades 30 hours in advance. Think about that. You can plan your day trades sometimes as much as 30 hours in advance. Well, what about those traders that make last second decisions like, oh my God, did you see that? Go, 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 trade, 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 let's go, go, whoa, 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 whoa. Settle down, Haas. Okay, so here's a simple little day trade I set up for you yesterday. Here to here to here. And we said this is the conservative target or the expected outcome. And that was yesterday, but not for yesterday, for today. So somewhere in here could have been the trade. Then you have your second chance, of course, because, right, Forex loves you, came back, and look at this, to the exact pip. To the exact pip on the exact 4-hour scenario. Or wait, these are weeklies? Oh my God. Or else, okay, sorry. I'm talking like they're day trades. It would be exactly the same. Sorry, these are swing trades. My bad. So I must have done this for the swing trading group. My bad. These are weeklies. So in this case, right, there's one op, there's the second op, and then this is to the pip. Sorry, I thought these were day trades for, I don't know why. They look like day trades to me. So anyways, the point is plannable. So during this period, we hit the expected top, expected profit taking took place, right? Now you're at your 50%. 50% predicts 1382. Because what you don't see here is the 121.4, right? And I say 50% is in the middle, so you go for the middle target, which is 382, which is between 121.4 and 1618. And you say, Wayne, why 121.4? Well, again, I'm self-taught, so I did 100 minus 78.6, right, equals 21.4. So then I went 100 and added the 21.4 to get 121.4, which gives you the congruency. It's the same difference as 786 to the 100. Okay? So anyway, so that's how I got that. Self-taught and worked really well. As you can see, this would have been the 121.4 in here, which still gave you the pullback. And then, of course, then the next period trade, which is the exact moment of trading on Sunday. Okay? They are day trades, Wayne. It's a 4-hour chart. Yeah, okay, so they are a day trade. So I typically don't have a 4-hour with daily. So what am I doing here? So they are daily trades, right? 24, 25. Anyways, whatever. That's part of trading, right? Where it doesn't even matter. Okay? It doesn't matter. But typically I don't use a 4-hour for these dailies. But I must have been doing something to make a point. Okay, this is just right from yesterday. So 4, 8, 12, 16. I mean, that's a long time ago. But that's the exact hour at the exact price. How about that? That's the exact time and price. So anyone that has gone through the day trading course, right? Anyone that's gone through the day trading course knows that, like, oh my God, that's the exact price in the exact time. Yeah, they are day trades, aren't they? Yeah, okay. Well, sorry for being sorry. Okay, all very much plannable, guys. All very much plannable. Okay, so that's Fibonacci, and then of course, based on regression and standard deviation analysis of yesterday's market, we're concluding we probably get to 27.5 today. So you got about 30 pips more juice in this, but that's the thing. Those that are showing up now, they're going for maybe 30 pips. Where if you did your job properly, you were down here at 126.5, right? Going for 127.5. So someone that day trades properly. So if you day trade the way that I teach you, Gordon, no, that would have nothing to do with Ryan's group. Yeah. Yeah, that's the professional track. That would have nothing. That's a different program, different education, different training, different tracking, different website, different payment processor. All right. But if you've already paid, I'll have to come up with some sort of plan for you. So don't cancel. I'll figure out something, okay? Ben wants to know how we analyze and make decisions. Well, that's why we're here, Ben. Yeah, we'll get you taken care of. Email me, Gordon, and I'll figure something out for you, okay? Okay. So if you trade properly, day trading we're talking about, if you day trade the way that I teach you, this has a potential, let's say, a logical potential for the day of 100 pips. If you just log into New York and you're like, hey, what's up, fellas? What's going on? Are we buying the euro? You only get 1/3 of that because you're lazy. Okay? Which means if you're that lazy, then you are not going to even trade this properly, right? So anyways, cool. So I know that's not you. That's the old you. All right, so cool. So go back to yesterday's video and see what we were talking about here, about how to use different things for this breakout through Fibonacci, pivot points, front running. There's a lot going on here because this is the front run trade we were talking about in the New York session. And then here's the Asia open, right? And here's the Asia fade. It's just gorgeous. So anyways, get on ya. Get on ya, mate. All right, so we got to do pig now that FTSE's open. So this whole Brexit thing's over now, huh? We're good now? We're done? So I look at this and I see dollar should be weak, but it's stronger than pound. Okay. Euro's stronger than pound. Euro's on here for some reason. Don't know. Pound Noki, Norway is stronger than pound. Swiss franc is stronger than pound. And Australian dollar is stronger than pound. Okay. So it's funny because on Bloomberg they're like, "Oh my God, the pound is so strong. This is such an amazing recovery now that Brexit's over." I'm like, "Whoa, whoa, whoa, whoa." Does that pound look strong to you? Even on a 4-hour chart, does it look strong to you? And it's amazing what the media is telling me. The media is telling me that pound is on a huge rally. And I guess if you look back to March, but even then, look at this versus Norway. So, okay. By the way, this has probably more to do with oil than anything, huh? Alton says we are at a 2-year high. Not against here. Not against Norway, for example. So this is oil getting crushed, going to zero, and your opportunity to buy back. Distressed investing, if you will. Oh, you said that. Yeah, so again, right, I suppose you have to look at compared to what, right? So I'm assuming dollar here. Okay. And of course, I would argue, that somewhere in here, I think it was like the 13th of April. Okay. I declared dollar weakness for years. So I would argue if someone is saying, well, this is a huge recovery for Great British Pound, I'd say, no, it's not. And they're like, look, Great British Pound has been straight up. Yeah, it has nothing to do with pound. What is FTSE? The Financial Times Stock Exchange. Yes, the British stock market. Okay. All right, so I would argue, yes, this has gone up, and if there's too many indicators here, let me just kill that. Okay. I would argue that, yes, even though this is up, this is not the Great British Pound appreciating. It's the US dollar depreciating. And I did say it exactly in this moment of time, somewhere in this square, and I think more like this square, somewhere in here. Okay? Because that's March, April, May. Yeah, somewhere in here, I made my declaration. Now, you say, well, what declaration? Oh, why? That the dollar is going to fall for 5 years. So, right, this is that part of the equation. This pair will go up simply based on that. Then I look at the Great British Pound today, and of course it's weak across the board, so this should move sideways. Okay? And then of course, okay, it would be great if the UK economic condition improved. That'd be great, because that would make me really, really, really right. Wow, is that a Spice song? That's a Spice Girl song, isn't it? No, what you want, what you really, really want. All right. Okay, so that's that. So I would say this makes sense, but it's not the pound. No, it couldn't have been that late. Daniel, no. No, that sounds way late. Was it? Well, I don't remember that. I don't remember an oil supply shock of that time, but yeah, could have been. Alrighty, all right. But I can tell you it lines up perfectly with the flow of money regarding bonds. Okay. Okay. So anyway, so going back to this, I'm not quite ready for irrational exuberance on the pound, but I get it. If Brexit's over, then great. Less risk. Does that mean I mean, I don't know. It just, there's less uncertainty. Well, you also have to be careful just as much as I have to be careful. There isn't one thing. Okay? There may have been a confluence of things. But I can't say, well, it was only Greek bonds, and you can't say, well, no, it was an oil shock. Well, it could have been both. Okay. But, so what we were talking about, why was the oil weak? Okay, so why was the dollar weak during that period? Daniel, you'll have to ask yourself or prove why that would weaken the dollar. Okay? So like I explained why money flowing out of the United States and into Greece would weaken the dollar, and why when those bonds expired, Americans pulled their money out, why that would strengthen the dollar, and then why they would buy back in later. Remember, it dropped all the way to 7%. So at 12, that was enough for a new flow of investment. So new investors catch the 12, and then the dollar weakens again. So like the ebb and flow lines up perfectly, right? So now you would say, okay, some sort of exogenous supply shock occurred around that period, and you're making the declaration of strong versus weak. Okay, great, but now you'd have to prove it. Alton says, I don't understand how the current strategy of printing money, first of all, they don't print money, they borrow money, and fiscal stimuli cover the earnings gap of the population not going. Yeah, well, no one said it was smart. Actually, the raising the stimulus from 600 to 2,000 makes no financial sense whatsoever. Now, it makes political sense, but it's really a dumb idea. And it's, once again, politicians coming in and screwing everything up. Okay? Okay? That's that. For example, they're giving money to everybody. And will that open up restaurants? No, the government still forces restaurants not to open. So why don't you give those people money? Well, we're giving everybody money. Okay, but it doesn't solve any problems. So what are they going to do with the money? You're supposed to like, oh, well, if the restaurants were open and you gave everybody a bunch of money, then you could run to your favorite restaurant. You're like, oh, this is so great. And waiters get job, and food prep people get job, right? Sous chefs get jobs, waiters get jobs, maîtres get jobs, right? And all this, and it's all working, and they're ordering food from the food delivery people. So truck drivers have jobs, and warehouse people have jobs, and this is all great. But since nothing's changed, they're like, here's a bunch of money. Okay, I'll buy something on Amazon. Well, people are already doing that. Yeah. It's just, it doesn't make any sense. It makes no financial sense. Okay? Now, I like the idea of some stimulus. I didn't like the idea that the government was calling it stimulus, but they weren't going to cut any checks. Okay. Now, 85% of Americans are going to get free money. I don't get any free money. It's too bad because I would have spent it. Okay. Too bad, so sad. Okay. And then, of course, they're giving people money, and then they're like, oh, and you don't have to pay rent. That's part of the package, that if you default on your rent, they can't do anything about it. I'm like, And then now the guy that owns the apartment building losing 50 grand a month, they're going to say, well, your net worth is too high, so you're not going to get any stimulus. And he's like, what? But you're allowing all my renters not to pay rent. Yeah, well, you're rich. Doesn't feel rich to me. So it's a bit of a bewildering situation. Now, I would be pretty pissed if the government came into my restaurant, if I owned a restaurant, and they're like, you have to close this down. This is a mandate. You have to shut down, right? We don't want to shut down. We're willing to hustle. We're willing to take the risk. And if someone actually comes in, we want to serve them because they want to take the risk. They don't mind. They want to come to my restaurant and have lunch. And we want to serve them lunch. Now, it might be only 10% of normal, but if someone comes in and we're willing to serve them and they want to be served, we want to do business. No, you're not allowed to. Now, that dude, when you shut down his business against his will, I think you're depriving him of liberty. And therefore, you should pay him money right now. Right now. Here's a suitcase of money from the men in black. Right? All right. All right. All right. So, yeah. So what do you want to do? What do you want to do? Well, this comes down to your bias and your decision-making process. Is anyone going to buy the Great British Pound every single day or look for opportunities to buy the Great British Pound every single day for the next, for all of 2021? Has anyone made a decision? Are you going to be a buyer of Great British Pound? Or are you going to like make it up as you go? Yeah, well, next week's already 2021. I'm assuming, this is a loaded question. I'm assuming you have sat down, did a business planning retreat. Now, mine took like a week to do. I had to spend a week at the Ritz-Carlton. I'm assuming you're a professional and you've decided to sit down and create an investment thesis. Okay? Right. Well, Moreno, that's different, right? That's taking advantage of relative strength. But in general, I want everyone to have some basis of what they do. What do you do? I don't know. Just won't add up to a business. Okay? So, you can be a bull and day trade this down because that's obviously a sell. I mean, it's just as obvious as this is a buy, this is a buy, and this is an exit. Okay? Those are all incredibly obvious. This is what I would call a counter trend trade, which is short-term short to long-term long. So yeah, you can day trade that down, sure, but that doesn't have anything to do with an investment thesis. Imagine you stand on stage and somebody says, okay, explain to us, what do you do? Okay? You need to think of your trading and your trading business as a startup. Okay? So when I finally get the ability to travel to South Africa, rent a giant hotel, hang out on the beach and work with you guys on the professional side of your business, we're going to work on things like hanging out by the pool with a cocktail and somebody comes up to you and says, hey, so what do you do? And you don't sound like a bumbling idiot, right? You got to have an elevator pitch that clearly explains what you do and then maybe actually gets a potential investor excited. So what do you do? I don't know. What's your outlook? I don't know. What's going to happen in 2021? I really don't know. Not going to get you a lot of clients. Okay. So this would be a potential trade, don't you think? If you had some bullishness in you on the pound or bearishness for the Swissy, which would be a global macro play, you'd be looking for this. South Africa has to wait. Oh, no. No. Hey, but that's 3 months ahead of Congo. Okay. Cool. So I'm hesitating about making big decisions about next week because it's a sensitive week. Probably everyone that's going to die has died. All right. So anyways, I'm making my point. The media told me that the pound is ripper strong. And then I opened my charts. I'm like, it hasn't been strong for days. And they're telling me it's strong because of Brexit. Brexit has been solved. We solved Brexit. Huh. Well, I guess if you go out and look at the last 6 months and then conclude that because of the last 6 months, what happened over the last 2 days created that, which of course would be ridiculous. So over the last 2 days, pound is weaker than Noki, pound is weaker than euro, pound is weaker than Swiss franc, pound is weaker than Aussie. So it seems like the Great British Pound is, generally speaking, over the last small period of when they fixed Brexit, it's weak, not strong. So thank goodness we don't listen to the news. Okay. All right. So here we are again, stuck in our zone. Here's where the out is. And here's like if you were going to front run, which is very dangerous language. Right? Here we are. So let's make this a little clearer. This is where the month of December you're expected to be out. Okay? This is the holiday week that you should skip. Oh, look, nothing happened. Okay? Now, in the first hour of trading this week, you have a price here. Now, this is a tricky one because if you were a bull, you would buy it, and if you were a bear, you would sell it. Now, the interesting thing is maybe that's cool because either way, you know very quickly if you're right or wrong. Okay? But based on what I teach you, okay, bulls buy here, okay, and bears sell here. Okay, so which one happened? I'm not saying of next month for sure, but certainly someone's going to try and they might actually get it right. Okay, because remember, we don't know the future. I'm just saying based on years of experience. There's a reasonable probability of profit taking, but I don't know. So if you think there's reasonable probability of something, but you don't know, does that mean you take the shot? Okay, well, there's 6 chambers and there's only 2 bullets. You probably won't blow your head off. Do you want to play the game? I'm like, no, because I'm more worried about the 2 bullets. Okay? Yeah, that's what I'm saying. Like, wow, you probably won't die. Well, there's something that changes, right? Now, if you were going to die anyways, that would change the game. Okay? And if you were desperately poor and someone offered you $1 million to take it, you're like, well, my life sucks anyways. So maybe you risk everything because if you got $1 million, you might perceive that as changing your life. Somebody else makes $1 million a day and they're like, well, you know, I wouldn't land my airplane out of schedule for $1 million. Okay? Yeah, all of it's game theory, of course, right? You have to change the variables of the game and you'll get different outcomes. Okay? So what I'm saying is, I just don't see the need to guess. I'm not going to guess this. I only know what I know. Okay? So there's only what I can prove. To quote the amazing, was it Dr. Dre? It was, no, it was Ice Cube. To quote the great Ice Cube. It's not what you know, it's what you prove. Or wait, no, maybe it was Denzel Washington that said it. Anyone watch Training Days? It's not what you know, it's what you can prove. So anyways, I know this could have some profit taking, but I'm not going to gamble on it. So what I'm getting to is if you're a bull, you had this bullish buy zone. You also, because you've taken my training course, you knew to be at your charts at exactly that minute. Okay? So, what do we know? Someone that buys here is thinking here. Which then sets up a counter trend. And if there's a counter trend, I might as well get short anyways because I think there's a reasonable probability of profit taking. But I'm not going to just start selling because of that. Okay? Do you sell Bitcoin because it jumped $6,000? Hell no. You'd be the only idiot selling it in the whole world. Imagine that. Imagine the whole world laughing at you. Oh my God, look at this guy. Hey, Billy, look at this guy, he sold it. And they'd be all falling all over each other laughing. It'd be so funny. Why did you sell it? Well, everyone in the whole world was buying it, so it couldn't possibly go any higher. Oh my God, look at this guy. You crack me up. Funny. You're funny. You're funny like a clown. Right? Yeah. So that is a form of degenerate gambling and guessing and betting. I bet you can't go any higher. That's not a basis of logic. Okay, do you know how to price an apartment building? How much is the building worth? I can tell you to the penny. What's Bitcoin worth? This is not this much, right? You know, like in finance, for example, there's an educated process of deriving the value, right? Like you can say that building in this neighborhood, in this market, with these rents, in this situation, and based on your personal cost of financing, there's a value of an apartment building for you. And then let's say you're trying to buy it and you have 3 or 4 or 5 other people also trying to buy it. They all have different values. I hope you understand that. What it's worth to you isn't what the same as worth to somebody else because they have different financing costs and they can't pay as much If you have lower financing costs, you can pay more and get the same value. The value stays the same. The price will differ. So someone that has to borrow with a 5% mortgage versus someone that can borrow with a 3% mortgage, the 3% person can pay more and it comes out to be the same monthly, right? And then someone else that has cash can pay even more because they don't have the monthly overhead of financing. So they can pay more and get the same value. So the person with cash gets the building. The person that can only put 10% down and has to pay 6% mortgage doesn't get the building because they can't afford it. They can only pay less. But the value is always the same. So what is the value of a currency? I want you to think of it as a logical, maybe not a financial, like adding up cash flows and costs and stuff, but I want you to think of it that way where there is a logical price, and betting is just like the dumbest way of doing anything, really. Okay? There's a fair market value for Bitcoin, and you should determine what that is. Okay? So yesterday I said this is an interesting price because it's based on some sort of standard deviation from last month. Now, I'm also trying to tell you, and I told you this yesterday, but let's make it even clearer. There's some logic going on here. Now, most people that trade this have no idea this is going on. Think of it that way. Okay? Think of it that way. Most market participants have no idea what's going on here. That is obviously a play. That's obviously a play. This is obviously a play. Okay? As I showed you yesterday, this is obviously a play. People that are trading this know what they're doing. Right? So you got to be careful. I wouldn't trade against these guys. Okay? And yes, we do know there's standard deviations going on here that are important. How do I know this is important, guys? Why would I say this price here, and the closer we get to the close, which is December 31st, why do I know this is important to the smart traders that are trading this? On 3 days for a close? That's crazy. I get Bitcoin transactions done in 3 hours. Somebody says, boom, all right, I sent you the money. Okay, I get notified, money's on its way, they have to verify it. Sometimes it's less than 3 hours, but it's about 3 hours, and then it's all confirmed, and the money's in my account. Well, so On says I used really low fees, so I don't even know what that means, but like in the old days when I got a bank transfer, the bank would do the foreign exchange fee and just rape me on this. Right? Like hundreds and hundreds and hundreds of pips off. You're like, dude, that's a big spread. How'd you like to pay a 450 pip spread? Okay? For example. Oh. Okay? Plus a fee. Okay? And it would take tomorrow next. So it would take 3 days to close. And if there was a weekend or a holiday in there, 3 days plus weekend and holiday. So it could take almost a week to get your money. And by the way, on $1 billion, that's some chunk of change. Okay? Now, it's, what is it, about 2%? Maybe? maybe. And it'd be 3 hours. Is that about right? Let me see. Guessing here. It's probably, well, let's do one thing. So let's say calc. Let me get this up here. Let's say plus, let's see, 150 bucks over about 10 grand, I guess. Oops. How do I go back? 100 plus, there's a bit of a fee in there. Yeah, so it's pretty close. It's about 2%, I would say, 1.5 to 2%. Okay. Okay. So if you ask me, 1.5% to 2%, and it's done in 3 hours, that's fast, like ridiculously fast and unbelievably cheap compared to traditional Swift transfers. Right? All right. So anyways, let's go on here. All right. So yesterday we were here, and right? And Morena was here. So Morena bought here. Nice trade, Morena. And then we were here at the New York Open. And what did I say? Up or down? You can rewind the video if you want. That's right. Herman, it snowed on Christmas Eve. And that's that. And by snow, I mean you can see the snowflakes in the sky. And that was that. Just the right timing and just enough. But now the lake looks like a mirror. I don't know. Let's see. I don't want to disconnect. Oh, you can't see. I don't want to disconnect the camera. It's hard to see because you got a weird angle, but you can see some of the water and everything. It's nice. But so it's sunny. The lake looks like glass. There's not even a slight breeze. That's right, guys. Oh, well, it's not that it's not what I mean is it doesn't, well, let's get back here. What I mean by that, and you're absolutely right, Ronald, I said that doesn't mean sell. Now, of course you could sell. If you're a day trader, that's a sell. If you're more than a day trader, actually that's only a market open trader. So like a day trade would be, you'd buy it here, you put a stop down here and you're done. You might be in it for a day or two or three. A market open is a form of a scalp, and you buy it and you're done. Okay? So if I was just trading this as a day trader, Okay? And I explained it to you and I trained you on how to do it. But if I was here at London Open, I'd buy it. There's no doubt about it. And if I was a day trader of oil, this is my job now, and New York was about to open, I would sell this. It doesn't mean sell, but if you're a day trader, you're like, oh, yeah. that, and it has to do with time of day. So you have to go back and watch the video where I teach you how to trade oil. And time of day, of course, because it's a market open, makes this very obvious. Okay? But it doesn't mean this is bearish. It means there's short-term profit taking. Like this means buy, for example. This means don't buy, but you could sell it. Let's see if I can get this. Okay. So for example, that definitely means buy New York. This definitely means sell London, but you don't have to because it's an uptrend. You see the difference? This is gobbledygook. This would be a buy New York. Sure. Probably, it could be either way here. This is, it's either way. You'd probably sell this because of the trend. This is definitely a sell, but New York Open is here. So this is sort of an out of position buy. This is definitely a buy. And you would have bought it London and New York. This is definitely, this might have actually been a sell. This was probably a sell, so this is difficult, right? That's why I don't like selling in an uptrend. This is definitely a buy. This is a London buy. This is New York sell. This is probably a New York buy, but it didn't work out, right? Well, it doesn't always work out. Here's a New York buy, pretty simple. New York buy went nowhere. Oh, these are probably holidays. Well, anyways, New York buy. So a couple of days of nothing. You can see because the market's not moving, you get caught up. This is definitely a New York sell. This is New York buy, New York buy, New York. You could have done either way. And so on and so forth. So you can see why I filter things out with trend, because it's a little more dangerous, I think, to sell in an uptrend than buy in an uptrend. But timing is everything. Okay? Like you might see like this is a London, that's a buy. And then by the time New York opens up, which is probably somewhere in here, not quite the top. No, I didn't mean to do that. Let's get it more real. It's probably closer to in here or something, but it's a sell. So now you take your time of day, you take, this is the market target. So you're like, yeah, I'm going to dump it off that. And you bring it down. Okay. So yeah, you're selling it off 49. You don't have to be a rocket surgeon to figure that out. Okay. Thank you, Daniel. Appreciate that. Okay. But now you might say, oh my God, now oil, now this is how I make money. No, dude, this is how you trade. The most important thing here is you have to know what you're doing before you do it. Otherwise, you don't know what you're doing, and there's no way you're going to be successful if you don't know what you're doing. Okay? And everything is based on that. And you're like, well, time of day is so important for trading oil. Dude, time of day is important for everything. Okay? So like gold. If you want, why don't we do it this? Template. Okay. And now we have to go insert indicators, custom, biased pivots. Where are we? Why can't I see this? Zero line, price action pivot points. No. Biased pivots. Where are they? Biased pivots. Sorry. All right. Do you want to be a bull or a bear on gold? Talk to me, Goose. Okay, a couple of bulls. So we'll take bullish mode. Okay, done. Okay. So what are we looking for? Well, for example, if we try to guesstimate New York open, New York, it's probably, right, it's 2/3 into every day. I'm trying to get this 2/3 in. About here. About here. No, that's way late. Hang on. It's about 2/3 in. It won't move properly. I think sometimes it tries to guess where I'm trying to throw this down. That's about there. New York. About here. About here. And about here. Oh, no. See, they're all slightly a little bit late. This one's a little late. It's about here. That's a little late. It's more like there. Okay, there. It's pretty close. All right, so this is time of day now. And let's slow this down. Let's take a look. The question is, do we get volume and volatility at this time of day? Okay. So you're a bull. What you're trying to do is buy dips, correct? Not so good. Not so good. Not so good. Okay. So analyzing this, okay, as a day trader now, you want to be flexible on buying and selling. And you have to ask, are there patterns here that can be helpful for you? Okay. So I think if you were a day trader trading both ways, you would sell this, but you wouldn't buy it. I think if you were a day trader, you would sell this, but you wouldn't buy it. A day trader would sell this, but you wouldn't buy it. Because you can't buy this you're so out of position, right? Would you agree with that? You would sell it, but you wouldn't buy it. Okay. I think if you were a day trader, you would buy it, but you wouldn't sell it. Think, right? Right. What would you do here? Okay. This is the complicated one because you might be thinking this, but you might be thinking this. So I don't know what you'd do there. Okay. Now, at this point, you're probably a bear because it made the lower low, didn't make a lower high. So if you were day trading at the New York Open, you'd probably sell it. Okay. 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 So your interpretation always comes down to your bias, whether you're more of a bull than a bear. Can you buy low? Remember, you're a bull. Okay. At some point, you're going to filter all this out because it didn't make a lower low. Okay. See, I think these times are slightly off. See, I think this is probably more like the New York Open. So you really have to kind of be there. It's more like 1400, isn't it? So they're all a little bit off, but I'm trying to teach you that the time of day can be important, but you're filtering it through. So ultimately what's always happening, whether you're a bull or a bear, is you can only buy low or sell high? Right? So you have to ask yourself, is this buying low or selling high? Probably not. Is this buying low or selling high? Well, if you're a bull, yes, it's buying low. A bear would probably try to sell it up here. Okay? I think when you have a bias, the best part of the bias is it keeps you out of a lot of trades. And maybe you don't appreciate it now, and maybe one day you might, but it's all the mediocre trades that make a difference in your trading. You might think if you trade more, you will make more money, right? And that might be true, but you also have to recognize that there's an expense cost, not the cost of your spread, but the cost of your losses. And what you may find over time is you'll have some losers, right? More wins. And there's going to be a lot in here. Okay? And when you end up over trading, what it actually does is you will get more winners, but you'll get more losers, not more than the winners, but more than the sum. And it's interesting, you will find over long periods of time, like analyzing a year of your trading, if you like double, like, I don't mean if you only make one trade a day, dude, you're not doing it right either. If the difference between, let's say, 5 trades a day and 10 trades a day, you might find that you actually make about 20% less, because you're taking more mediocre trades. You're going to get some more winners, but you're also going to get some more losers, and the losers counter some of these, and there's a real cost. And if you go from 10 trades a day or 5 trades a day to like 20 trades a day, you might actually make 30% less. Because imagine it like this way: 1 trade, 2 trades, 3 trades, 4 trades, 5 trades. This makes 100. This makes 80. This makes 50. And then you lose, on this one you lose 25. And this one you lose another 25, let's say. Right? The negative 50 takes all this down quite a bit, percentage-wise. What I'm suggesting is, when you get to tops of markets, and you know this, it's definitional by like pivot points, for example, you don't make trade 4 and 5. You don't make those other 2 trades. So you trade less, but you make 50% more. But on, let's say, the difference between making, let's say, 250 pips in a day and 200 pips in a day, actually over long periods of time, is very statistically important. Daniel, I recommend getting out when the trade plan is over. Trailing stops doesn't make any sense to me. You should have a plan for your risk as well as your reward. Okay? Somebody says scalp should be a holiday or a hobby or something, rookie. No, I think you need to know how. And most importantly, you can look at, like, these trades, you can see some are good and some are mediocre. Right? So your ability to filter out the mediocrity is going to be important on the long run, versus you being a mechanical trader and you're like, Wayne told me to buy gold every single day at 7 a.m., so I will. I mean, all right, well, maybe you make money. Okay, but you still have to filter it out and say, where's the top of the market? See, I think what you'll find is when you start to day trade a lot and market open trade a lot, and then scalping a lot, it'll remind you, again, once you do this over a long period of time, it'll remind you how important things are like weekly or monthly pivots, for example. And it could really set up or ruin good day trades or good scalps or good market opens. And it'll remind you how important these are. And then you're like, well, if you only do these, right? So let's say then you give up scalping because it's a lot of work. And then you go back and you're like, all I do is swing. But then it reminds you how important entries are. And you get in this circular problem of, right? And I hear this a lot. Which trading is best? Which type, right? Or what strategy is best? Well, you have to be an expert in all of them. You can't be all throttle and no brake. I want to go fast. I want to get rich. But I only want to do 20% of, right? I only want to know 20% of the information. The other 80% I'm not interested in. Well, dude, if you're going to be a race car driver, you need to know throttle and brake, right? Like, you need to know how to set up long-term trades and short-term trades. You need to know fundamentals and technicals. Well, the one argument against that, actually, right, is George Soros. So Soros is a bigger trader than you. He's made more money than you. He's broken more central banks than you. And he's probably never looked at a chart. Well, I doubt that, but his trading is fundamental. So he doesn't give a crap about what the price is today. Why is that even relevant? Seriously, if you think about it, why is it even relevant? Who cares? Right? So like Daniel says, I said in May that I would be short the US dollar for 5 years. Okay, great. So why is today's price relevant? Who cares? It's so stupid, right? Because if I'm selling for the next 5 years, today's price is irrelevant. In fact, I want the dollar to get strong so I can sell it. I want profit taking in January. Great, I'll sell it. At what price? Who cares? I'll just tell my broker, sell some more. Every time it drops 100 pips, drop more. Okay? And meanwhile, we come to some of us and you made a whole bunch of money here and this was a bad day for you. And then you lost money on this one and then you picked it back up here. And it's a war every day. It's crazy. And then someone else says, well, during this whole period, you had a crazy week. You're like, wow, according to me, nothing really happened. Right? Like, you're like, wow. Wouldn't even be reported. Wouldn't even been put into Mr. Soros's report, right? The Dukes, yeah. So, yeah, just food for thought. Ultimately, if you're going to be a professional trader, like let's say you work for me at my fund, and you're like, I don't know anything about nothing. I'm not interested in hiring you, right? Oh, I know how to scalp. Good. I want you to be a well-rounded investor / trader. Okay? And I think any investor, okay, someone's going to invest in you. You know, if you're hanging out at a party this time of year, having a cocktail, and a rich person comes up and they're like, hey, man, the rich person heard about you, friend of a friend says you manage their money. He's like, oh, I heard you're a Forex guy. Yeah. Oh, you manage Michael's money. Yeah, yeah, yeah. How was 2020 with COVID and everything? Well, it was bad on our family, but we actually did financially quite well in the fund. Oh, really? So what do you expect for 2021? I don't know. I can't even make a guess. I have no idea. I can't tell you anything. I don't even know what's going to happen in January, let alone 2020 or 2021. Like, no idea. It's just like it's just a dead end, isn't it? I have no idea. In fact, 2020, we just got hyper lucky. It was great. We're hoping to be hyper lucky again. Like super hyper lucky. Right? So, I don't know if you read between the lines. Sometimes I'm subtle, sometimes I'm blunt. Why don't you sit down over the next 5 days and come up with an answer? Just saying. I don't know. Just saying. Just saying. That might be a good exercise. I think in 2021, we are going to have year, and it's going to be. And the reason I think this is because of, and therefore I need to watch and so I redacted all the good information. This is what I think. This is why I think it, and these are the things I'm going to analyze as we go through life. Pretty simple. Eliminated? That's a pretty strong word. Eliminated. Okay? Millions of people got on airplanes over the holidays. I've heard the traffic in New York City is so bad that you would never know that there's a pandemic. Except people in Ubers wear masks in the back seat. Like, otherwise, you wouldn't even know. So I don't know about the process of eliminating it, but we do need to get back to a more normal life. Does anybody here know somebody with a real job? Sorry, I laugh because I was thinking about it. I honestly don't know anybody with a real job. Do people still go to Starbucks and get coffee and stuff? Do you stand in line at Starbucks? Honestly, I swear to God, I don't know. Are we there yet? Is that where we are? If you're in New York City and you're walking to work and it's 7 a.m., do you stop and grab one? Yeah, and do you go through drive-through? Or if you're in New York City, are they open? Do you go in and stand in line? Are they 6 feet apart? I mean, usually at 7 o'clock in the morning, the line's out the door anyways, even before COVID. Is that right? Yeah, see? Yeah. And Ron has never stopped, right? Ron would be on a plane a couple of times a week during the worst of COVID. Yeah. Highlander says drive through. People don't even care in my country. What country is that, Daniel? Right, as I know Americans standing in lines. Romania. Well, Ron says been working in Texas, but you were also in Cali for a while and then out here, right? And flying to Texas on Saturday to work a couple of days. Yeah. Well, exotic dancers have really been in demand, so Ron's been all over the place. Hey, man, dancing's in my soul. It's in my blood. Dancer dances always. I gotta always move. Yeah, me too, man. So anyways, there. Thank you for that. Yeah, Ron's got the only freaking flower program that's done anything. But see, I'm self-quarantined, right? So I never leave my house. We rarely go anywhere. When I do go somewhere, I wear a mask. So I don't really see the real world. I don't know people that go to an office. But it's interesting. It's interesting to think, like, what do you do when you're there? And I don't know. I don't get it. So I have a feeling that we're pretty close to normal. Yes, things are different, but we're pretty close to normal. What we need is to open like restaurants and bars and stuff. But I think they're open here. I can't even tell you. It's so funny. I can't even tell you. I can't even tell you. I think restaurants are open in Georgia. We used to do a lot of Uber Eats, but we haven't done that in a while. Yeah, lots of people working from home. Yeah. Is that right, Patrick? You were fixing trunks on Long Island until 2015. Never been in New York City till then. You're kidding me. That's amazing. Yeah, nothing is closed in Georgia, huh? Strippers have to wear masks, though. That would be funny. All right. That's funny. That's pretty funny. I think that's funny. All right. All right. So, yeah. So what do you want to do? I guess I'm waiting. Waiting. Little bit early. I'm waiting to see January. Oh, I want to remind everybody in my group, my swing trading group, my Thursday group, we are going to meet this Thursday. And bonus, if you're in my swing trading group, we are also going to meet Sunday at 6 p.m. Sunday. Sunday. Let me double check that that's true. Yeah, Sunday the 3rd at 6 p.m. Oh my God. And then I believe it's going to be Tuesdays in January. I'm going to start recording with the swing trading group my macroeconomics course. Oh my God. So how many people would like to join the swing trading group? So that you can get the macroeconomics group, the Thursday meeting, the Sunday meeting. And remember, January could be an extremely important month. Extremely. This is why I'm hesitant to project out to next week. I don't want to do it until we're next week. Zamo says, I can't access the swing trading group. Okay, so you're in fxbootcamp.com and you click on the connection or the section that says live trading group, I think it is. We're on, Daniel. The payment went through, though. Okay. And Zamo, right, so are you saying for the annual membership? Joseph, Wayne, no, this is what I'm asking though, Joseph, because I think maybe Zamo did this. It will not work if you haven't paid for fxbootcamp.com training courses. So here's the assumption. 6 months ago or 8 months ago, you signed up, you took the 76% discount, and you've been watching videos, but you haven't been ready for the live group. Now you can join the live group. All right, so Zamo, you created your account, you got your login credentials. It should work. Okay. But yes, you have to be a member of fxbootcamp.com first. You can't join the group unless you're a member of FX Bootcamp. Yeah. But it's not a big deal. 76% off. Like, it shouldn't be that big of a deal. Paid for the courses early in this December. Okay. And then Then you logged in and you clicked on the unlock swing trading group section. It's $99 a month or $900 a year. It shouldn't be a lot of money. It's probably one of the cheapest things out there with a guru attached to it. Have to find your original FX Bootcamp email and go through it that way. That is super strange. So you go to fxbootcamp.com and you log in, right? Right? Like, I don't understand the complication. fxbootcamp.com. So if you have an account here, you just click login and it'll work. I don't think I have an account, do I? No. Yeah, it's not going to be the right one. I don't think. No. I don't know if I have one. That's the other one. No, that won't work. I don't even have an account. Wayne. Yeah, I don't even have an account. So I can't go, right? Been going through the courses though, Zamo. ZZ says have to go through the war room button. What would that mean? Maybe you're in the old swing group. Yeah, maybe you're in the old swing group. Well, so that's how you, so you're, oh, well, so you're in the old swing group. That's what it is. You're in the old swing group. All right. Send me an email and I'll just give you a better link so you go that way. So that makes sense. I know Jim's in the old group because he's one of the original members, so that's probably what it is. I'll figure it out. The only other thing I could think of is you're in live.fxbootcamp.com. You're in the professional course, and then now you're confusing things. But that may be it, maybe not. All right. So dollar rand, dollar is weak, is strong for a bit here. So it's interesting. It's interesting. Okay. This set up beautifully off of 20, and now we're at 18. Very interesting. Got to pick up that carry. So I'm just hesitant, and it might be a good thing, it might be a bad thing. We don't really know, but remember, I can always catch the next move. I mean, in a typical month, I would just sell this. But in my brain, even if I'm wrong, it's still in my brain. I wouldn't be shocked if this happened first. So I'm just an extra level of hesitant. Okay. But I might have to, and this is where it comes down to our live groups. We'll have to talk it out as a group. Do you day trade it down and manage your stops in such a way that if you do get the expected up, you're knocked out, and then you try again? Or if it doesn't come back and we just continue the peso rally, for example, that you got it at 20 and that's that. It'll make the next 30 to 90 days. So I would say there in the next 90 days, for example, we will have a significant rally in dollar. And often it's in January, but it could be March. So there's a bit of trepidation, right? That's why I don't just throw down trades. Still thinking about ZZ. You have to go through the War Room button. So when you click on the War Room button, wait, if you're in the War Room, then you're in the swing trading group. And you have access to all the videos and the recordings. Right? If you're in a section of FX Bootcamp called War Room, right? If it says War Room, and it says click here to access the live trading group, or training group or whatever, there's a button. Yeah, then you're in. And under here is all the recordings, right? Of us meeting every Thursday. Yeah, well, I'm trying to figure it out. So anyways, email me and I'll try to figure it out. Most likely, right, you're expecting something different or something. Right. That's why, right? Alton thinks, yeah. So like, for example, you log into FX Bootcamp and this section says taking control, right? Taking control. And then and when you open that up, there's like 8 videos. And then the next one says fundamentals. And you click that open and there's like 12 videos. And then another one says day trading. And you open that up and it unlocks, you know, it opens up and there's a whole bunch of videos. And then down here, it'll say something like live group, or War Room or something. And if you haven't paid, then it's locked. And if you have paid, then it's unlocked. And you go in there and there's access to the live webinars through clicking a button. And under there is the videos of the recordings. Okay. Herman says, why is the South African Rand so powerful? Who says it's powerful? Because of that? Well, according to Daniel, I made a declaration right here, somewhere in that period, that the dollar is going to be weak. I didn't look at the rand to make that determination. So that's the thing. You see down, so you think rand strength. But you're only taking in half of the equation. So I look at that and I'm like, it's not that strong. Okay. So a better one would be to look at this. And you'll say, okay, based on that, it's strong. Okay, good. So now we got dollar and we got euro of roughly the same period moving this way. Okay. We also know that this was an amazing investment period for risk on. So why would anybody want to buy South African Rand? The economy is bad, and this is bad, and that's bad. Oh, so why would people do it? Why would anybody do it? Let's do this. Because when you're short, there is an unbelievably huge payoff. Huge! Okay? And once again, people might be confusing good with good and bad with bad. The world was near collapse. And I'm giving speeches about you cannot save your way into prosperity. You need to be investing into the stock market. You need to be buying real estate. You need to be buying assets. You need to be buying cash flow and income. You need to get in to win. So somebody said, well, I'm going to buy or I'm going to trade, this was dollar that I showed you, so we'll do this one. US dollar versus rand, and you're going to pick up 600% a year in interest. And if anyone else does this, you'll get asset appreciation. And why would this occur? South Africa wants money and they're willing to pay insane prices to get it. It's the same as buying the stock market, except you get a heck of a lot more dividends because you're leveraged 100 to 1. Okay? Thank you. XRP views. You want to look at XRP? Sure. XRP went up 300% and then dropped 90%. Great. So let's go here. So why should I care? It exhibits none of the things, none of the characteristics that I would like to own. Okay? And remember, right? Do you guys remember this? I was laughing when we were up here at people that would now suddenly be interested. Do you guys remember that? Now you want to buy it. Now you want to buy it. Joseph says, Wayne, I'm using 50 to 1 leverage. Should I be using 100? No, you're perfectly fine at 50. You could drop it to 25. It wouldn't matter. Okay? Laughing. Ha 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 ha. Who's laughing now, huh? Holy crimey. If you don't, right? Right now, we did have an FX Bootcamp member, and maybe it was DeVry, was saying down here and down here that we should be buying it. Okay, that's fine. Those are proper trades. So I'm not, was it Pete? Right? I'm not laughing at Pete because Pete was sending me emails and stuff like, Wayne, this is going to go up. This is going to go up. There's solid reasons. XRP is different, right? There's all these different reasons you should be buying. Cool. So if you're in at 10, 15, 20, right? Well, I'm saying me though, right, Pete? So, oh yeah, so it is Pete. So good, I got this. So I'm saying Pete was 100% correct, right? Peter was buying this, sending me emails, telling me all about it, the background, the fundamentals of it, everything. That makes him an expert, a professional. Okay? Inside knowledge, he knew more about it than most. My laughter is not at Peter for saying buy it. It's for the people that now up here decide they want to be in XRP. Not down here, but up here. And that's just crazy. Like, dude, reactionary. Okay? Okay? Just buying it because. And I think I talked about the difference between value and cheap. I think was part of the discussion here. Okay? So, something happened in here legally. And it probably had to do with somebody doing something bad to spike this up and make a boatload of money before bailing on the whole thing. So this could have been a nefarious move. I don't know. Peter probably knows. The thing is, should I buy it? Well, like I said originally, is it doesn't exhibit any of the characteristics of things I want to own. I don't want to own that. Now they better figure things out. Okay? No, that's fine, right? Right. I'm not laughing at you, Peter. You nailed this. You own it. You earned it. It's all you. Now, I hope to hell you took a bunch of profit up here so that you can buy some dips. And then because you were waiting to buy dips, it kept falling without you. Okay? But anyone that is buying here and now losing a lot, then just not, right? I don't know. The thing is, am I supposed to feel bad? Am I supposed to feel bad for people that jump? I don't know. Yeah. But make sure you don't buy a dead horse, Peter. That's all. Now, how about like Ant Group? Right? Ma's company. It was supposed to have an IPO, and then it died. Chinese regulators are all over Ant, and it's dropping, and right? If I could pick up something like that for cheap, I would buy it. And you're like, well, why? The difference between value and cheap is value means there's an intrinsic worth And for some reason, the price is less than the worth. It's like buying a house for $200,000 less than the market value for whatever reason. It's distressed. Okay? It's a bad time of year. Nobody buys a house in Christmas. And the seller's desperate for so some reason you come in, you buy it for $200,000 less than it otherwise would be worth in July. So you just instantly bought $200,000 in equity. Is that cheap? No, you bought value. Now buying a house, how do you just say it? Like worthy of burning down, right? There's no value. I guess I'm not explaining it well. You have to have a market that would pay okay? $1 million, okay? And for some reason, the market is inefficient. So this happened to me when I bought this property back in the financial crisis. Back in the financial crisis, people couldn't get a mortgage. Okay, I'm talking, I don't know what year this is, 2008, something like that, 2009. So I'm like, oh, look at this property. It's the largest property on the lake in my city. Okay, largest lakefront property in the city. So I'm like, cool, I want that one. And so I go in and I offer money. And they're like, how insulting. How insulting. How dare you? And I'm like, hey, the market's inefficient. They're like, it's worth X dollars. And I'm like, well, I'm willing to pay Y dollars. Like, what does that have to do with me? What you think it's worth is irrelevant to me. Here's what I think it's worth. And they're like, how dare you? That's insulting. So anyway, so I went away. A year later, I come back. It's still for sale. I offered 20% less than my first offer. Right? Nice! And they're like, oh God, thank you so much. Right? So there's a price and then there's a value. What is it worth in normal situations? Sometimes the market is inefficient and you might think it's worth $1 million, let's say. I'll make up a number here, $1 million, but not in the moment, because at that moment you couldn't even get a mortgage. You understand? So now, what's the market? The market goes from a normal situation where people say, I love your home, it has such nice lighting, and the closet is just to die for. So they go to a bank, they're like, they put 20% down and they get an $800,000 mortgage and they come back and they buy your house. But what happens to the market if you can't do that? There's no banks anymore. Then suddenly the market has dwindled to people that have $1 million in cash. And that's a whole different market, isn't it? Oh, I have to go back to pound? Okay, let me finish this up. So anyways, so if the market goes from a normal market to an inefficient market where there might be 100 people that can qualify for this, but one person qualify for that, and that person comes in and says, I'll pay you 800, okay? And then 2-3 years later, the market returns. Okay? Banks start loaning again. Regular people can get mortgages. Suddenly, the value is just bumped right back up. Okay? Plus now there's 10 people bidding on your house, so they bid it up to 1.1. You see what I mean? And because you were a buyer in an inefficient market, you unlocked the hidden value, the equity, and then the market pushed up even higher because now there's a bidding war because people have money. So you want to look for the inefficiency. It has nothing to do with the house is what I'm trying to say. So let's say there's this ant. I don't know much about the stock, so don't get all excited about the stock. But there's a company here that has like 5 businesses in the finance, right? lending and financial management and all that kind of stuff. And so they get money from this business, they get money from that business, they get money from that business, they get money from that business. Now the government comes in and says, no IPO, because we want you to potentially break some of this up. And so now the price falls, but the cash flows are still there. So there might be a situation where, and again, I don't know much about this, but I was thinking about how there's a price that's going to collapse, okay, because of bad news. The government is stepping in and breaking things up or shaking things up. But if the business itself, not the stock price, but if the business itself still makes money, then the price will drop from the value. Because you can do the calculation, the current profits of year zero, we'll do it this way, profit of year zero, which is now, plus in a year, plus in 2 years, plus in 3 years, plus in 4 years, and plus in 5 years. So you have to now perform a cash flow statement and say, well, if cash flows grow, and most people will just say, how about at 8% a year, every year for 5 years, how much is their cash now? So they make $1 billion, $1 billion plus 5, $1 billion plus 5 plus 5, $1 billion plus 5 plus 5. Anyway, so you do all this number, and you get another number, and you get another number, and then another number, Now you have projected number of profits, so whatever that is, and then you do a time value of money calculation backwards, and you can get the exact price you expect this stock to be worth. Now you could even do a CAPM model, which then takes in the beta, takes in inflation and interest rates and all that kind of stuff. You can come to a point where this company in 5 years will be worth, I'll make a number, $27 a share. Okay? But it's trading at 13 because you're thinking 5 years in advance. Then the government comes in, bad news, bad news, bad news, and now you can pick it up for 7. But you got to this number based on these cash flows. The cash flows don't go away. The government's just kind of mucking things up. So now maybe you buy it at 7, and in 5 years you sell it for 27. That would be sort of a value play. And you want to look at that in currencies. We look at economies instead of companies. But XRP. Now, I'm not an expert, so I don't know. Okay? But I look at it and do I want to own an asset that goes from 30 to 30, right? Or let's say it this way. It was actually more like 20. It goes from 20 to 90 to 20 in a month. Okay? So now you have to look at your reward over vol, and you get a Sharpe ratio. Do you think this will have a giant Sharpe ratio or a tiny Sharpe ratio? And it'd be tiny. Which means, mathematically speaking, I can't accurately predict how much money I'm going to make next year. You see? That's what people want to know. So, like, if you throw down $1,000 down here and you're like, well, in 5 years it might be worth, $2, and I'm buying it at 20 cents. Okay, great. You threw down hardly any money, and you're going to turn, $1,000 into $20,000. Great. You can buy a used Toyota Corolla, right? What's the big deal? Okay, do you drop $1 billion on this? Of whose money? Like, of whose money? Because they're going to say, well, right? They're going to look at your profits over right, over the volatility that you're taking. By volatility, we mean risk. So this is a risk-adjusted performance. And they're like, for every $1 you invest based on the volatility you're accepting, you're going to make 2 cents, right? So you're going to have like a Sharpe ratio of 0.02. For every dollar you risk, you're going to make 2 cents. Well, when you look at the risk-adjusted performance, is there anything you could do? Is there anything you could do with your money that would be better than this? And the answer, truly, mathematically speaking, is almost anything would be better. Okay? I guess the only thing worse is the devaluation of your currency based on inflation. But you would, right? So let's say if you bought the S&P 500, okay, it might go up 8% next year. Okay? And then you have to do your calculations. Well, what kind of volatility do you expect, or what happened last year? So the Sharpe ratio on the S&P 500 is probably pretty bad. So we're probably going to close up 15%, okay? But there was a 30% decline in there, right? So this is a bad number. But it's going to be better than, well, maybe not, right? Maybe it's not. So you're at 20, so, right, 500%. Right, well, it's more like 400, I think, right? All right, so 400% over negative 90. So you have to, right? Which one do you think most investors would take? Well, mathematically, it could be very similar, right? Right? And there's no answer either. People might be into the 400. Typically not, though. Okay? You see what I mean? Typically, people don't want the 400%. You see what I mean? And typically, investors don't want the 30% decline, right? Typically, the stock market would be like this. Now, these are not proper Sharpe ratio numbers. I'm just trying to make a point, right? Typically, someone might say, I'm willing to risk 10% of my money to make 15%. And you're like, that might be a lot, right? But what we went through is a negative 30. And your financial manager, your wealth manager, did nothing during that period, just like they did nothing in 2008. And I'd find that quite unacceptable. What did Ackerman do? On the way down, he hedged by selling options. The market dropped by 30%. He made huge money. Then he took the profits, because he took the option off, took the profits from the option and bought the stock market at a 30% decline, okay? And he made what was it, $3 billion personally? No, his fund made $3 billion, sorry. Yeah, but he made $3 billion. He made money on the way down, and then he bought in at the bottom and drove it all the way back up. So Bill Ackerman, right? So you could say the stock market was up 15%. Well, he hedged on the way down, so he didn't get the negative 30. Instead, he might have made 30. Okay? And then he doubled the money and bought down at this price. So with that 30, then that went from negative 30 to plus 15. So 4, right? So anyways, this number, many of these stocks doubled because he bought low and drove it back up. Okay? And now that's how you do it. Okay? Yeah, Daniel says rich people don't. What do rich people want, Daniel? Help me speak the language of money. I think Dalio was a smart dude and made very logical decisions. I think he's gotten to the point where he's a nutcase billionaire that worships himself. Ackman, I don't know much about, but I know how he behaved just recently, and he made a ton of money. I'm pretty sure Ray Dalio said the market's going to crash, 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 while the market's going up. And then the market crashed, and he lost money. I'm pretty sure that's how it went down. So I don't say anything bad about his investing strategy, but like a 700-page book on how to live your life with 900 different, what he calls them principles. I call them like stick-it notes. It's like walking to his office and he's got stick-it notes all over his walls. And he's got newspaper clippings and strings going from one to another. And he's connecting how the whole universe works. And I'm like, dude, you're nuts. You're a nutcase. But nobody else says that. Everyone worships Ray Dalio now. But I know what Ackman did. And he now, based on that, and by the way, we did this at Off the Charts with Wayne McDonald like months ago. And I read the trade to everybody, and I'm like, basically emotionally, I'm giving like a standing ovation, like, okay, Ackman, man, he nailed it. Like, that's how I want to behave. That's how I want to behave. Okay. So he nailed that one. So anyway, so that's what we talk about when we're drinking and smoking cigars. We don't drink cigars, actually. Drinking wine and smoking cigars. Just trying to see, is there anything really? Like USD Swiss franc, I just can't do anything there. Or I mean, CAD Swiss franc, there's nothing going there. Aussie versus CAD, you should be thinning the herd. Although, what price does this chart tell you to take profit? If I gave you this chart and I said, what's the profit target? What's the projected profit target? And yes, by the way, the answer to what do rich people want? They want income so they can live their, prissy little lives. But they do not ever, 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 ever want you to lose their principal money. Okay? Think of it this way. The guy gives you $10 million. He's like, this is my life savings. How much do you think you can earn with this $10 million percentage-wise? 20% a year? Cool. So you have to say, ma'am, you will have to find a way to live your lifestyle on just $2 million a year. At 8% and 3%, guys, you'll never be you'll never be a hedge fund manager. Okay, that's an institutional trade. Okay. So if you say, right, results will vary depending on where we are in the business cycle, but, okay, anyways. But, ma'am, you should budget a lifestyle of $2 million a year. After my fees, after all that kind of stuff. No, there is no worst. You can't, so you have to take all that language out. You have to take, right? Because they're saying, look, if I give you $10 million, what kind of life can I live? So now you have to show things like, well, let's put this into context. Over the last few years, I've had X number of profits per year, right? We'll do it in dollar signs, with very small volatility. Okay? Very little deviation. Okay? A negative 2% month is followed up by a 3% month, followed by a 2% month, followed by a 4% month, followed by a 2% month, followed by a 2% month, followed by a 6% month, followed by a negative 1% month. So on and so forth. Very little volatility. When things are bad, it ain't that bad. And when things are good, they're consistent. And over long periods of time, my Sharpe ratio, my risk-adjusted performance, shows that you can rely on me and that you can go ahead and live currently on 2M. And the 10 million will never leave. Now, if you want to throw down a little bit of financial management as as value add, you say, in fact, ma'am, what I'm going to do is I'm going to pay for my services. So I'm going to pay me money. And I'm going to save another million every year for you. And you're going to live on your 2M. So every year, so the next year it'll be 11. And then the next year will be 12. Next year will be 13M under assets under management. Meanwhile, you'll collect your 2 million to live on. Live your life. Don't worry about it. I got you covered. Okay? I got you covered. There'll always be gas in your yacht. That's all they want to know, right? And if you need to make a big purchase, sell your apartment. You probably make 40, 50% return on investment. But don't worry about your money. Just stay off the cocaine. Okay? This is what people want to know. What kind of lifestyle will they be able to afford if you manage their money? Okay? Notice that your income goes up every year. Oui. because you're charging assets under management plus a performance fee. So you're like, don't worry about it. Every 10 years we'll bump you up. We'll give you, in 10 years you can live on $3 million a year. Okay? Okay? But you say you can live on, right? And in 10 years, you'll have 20 M in the bank. Then we can talk about giving you a small increase in lifestyle. Okay? And of course, you're a wealth manager, so you said, well, I'm going to give $5 million for you to spend, and we're going to invest $5 million into real estate. Ha ha! Ho ho! Wee wee wee! Now you have to charge them for managing their real estate portfolio too. And they're like, Daniel, I love you so much. You're so important to my family. You should come over for the holidays. You should spend the weekend on the yacht with us. You'll love it. And they'll just thank you so much. Thank you for putting gas in the boat, Daniel. It's like, man, that's what I do. That's what I do. Okay? Okay? Yeah, Alton, but there's an air of desperateness to that. And then you would have to then say, how do you get X? So they guarantee you X per year. So which means you should take the money and you buy an asset that guarantees X. But it's like, it just stinks. It's desperate. It's like, I've only watched one Shark Tank episode. And the reason for it is, it used to be my job to do it for real. Like, I used to really make these decisions. And so to watch the TV show, I'm like, oy vey. Oh my God, it's hyper Hollywood or whatever. But some guy came out and he's like, I got this product and it's awesome. And then they start asking him questions. And one guy says, well, what if you did it this way? And he's like, yeah, we could do it that way. And then what if you did this? Yeah, we can do this. And then what if you did this? If I gave you the money, would you do this? And he's like, yeah, we could really do that. And he's like, I'm not giving you the money. He's like, why? I said I'd do everything you asked for. He's like, that's the whole thing. You have no... You're just this giant yes man. You're supposed to impress me with your vision is so clear and you're so stubborn that you'll do whatever it takes to achieve that vision. You just changed 9 things because I asked you to, because you're so desperate for the money, right? So someone that says, I'll guarantee you X, well, first of all, you'd have to say, well, how do you guarantee that? And then, of course, taking a guaranteed return, now you're giving up return is a function of risk. So if you're giving up risk, there should be no return. And it's really, I don't know, it smells stinky to me. Right? It just sounds stinky. Hey, I'll give you whatever you want, just give me your $1 million. It just smells bad. Right? Remember, I want value. I don't want cheap. Okay? Now, there's another way of looking at it. Okay? There's a high water mark. You could have a benchmark. Okay? You can have a look back provision or a clawback. Okay? And those are similar but different. Okay? So it's not a guarantee, but in the covenants of your agreement with your investor, your partner, right? You can put in certain clauses that protect the investor, which you want to do, but then there needs to be a reward for you if you're giving up. If you're giving up as the wealth manager or as the investment advisor, as the portfolio manager, as a hedge fund manager, if you're giving up income on the front end, then you need to get compensated, because now that's risk that you don't get paid or you get paid less because of the covenants in your agreement. So they should all balance out. So if you're giving up front end money, you should get back end reward. So now you might say, well, what are these high water marks, benchmarks, look back provisions, clawback provisions and stuff? Well, because I'm an expert in all kinds of alternative investments, in particular the legal agreements and structuring of said products, I want to borrow from these other industries and put back contracts that would benefit the clients, right? But then provide better reward based on our performance, okay? So for example, guaranteeing you 8%, for example, is kind of what I'm taking from whoever said some managers are guaranteeing X. Well, I can't guarantee you X because I don't know the future. I don't know the markets and all that kind of stuff. I mean, obviously, I can have some sort of history to say if the markets change, I can adjust. But there's a better way of doing that. So you can say, how about at the end of the year, right, you get the first 8%. Okay? So think of it as, are you guys familiar with waterfalls when analyzing like venture capital agreements? Think of it as a waterfall. You will get the first 8%. But I always collect my management fee. So we're talking about my management fee comes out. Because if I can't pay my staff, if I can't pay the lawyers, then I can't have a business. And I'm running a business, so you have to pay for that. Okay, so I collect my management fee before anything happens. Right, it's 2% annual. Okay? And then from that, the first 8% will go to you, but then what's the next step after that? What about after that? How much comes to me? And to what degree? And then is there like a piece that comes to me and then we do something with what's left over? Like, let's say I get my management fee, then the first 8% goes to you, and then you can say, well, then the next 4% goes to me, and then whatever's after that, we split 50-50? Or is this not happening? And then we can do this where, anyway, so every piece of that waterfall, okay, you can Google us too, all this language if you're not familiar with it. So you got the money, so you got your returns minus management fee gets you, your net, okay, your net. And then from the net, there's a waterfall. Who gets paid first, then who gets paid second, and then how do we divvy up the next piece, okay? And then what happens, sometimes you could even say up to a point, and then after that, and this, that, and the other thing. And this could all be created by borrowing from different structures and financial vehicles from different industries, because you want to be able to say, I can't guarantee you 8%, but I'll guarantee you I won't get paid until after you've collected 8%. You see the difference there? But if I'm going to give up my payment instead of my 20% performance fee, I'll have to pick up more because I'm taking risk. Okay? Because you're getting all the money up front and I can't feed my family. I work all year, right? And let's say we return 10%. It was a tough year. You get everything and then I get 2%. Or if you split after that, then they get 9% and you get 1%. And you're like, but I did all the work. Right? Like all of a sudden, like you worked all year trading millions and millions and millions of dollars and you get paid 100K, you're like, dude, right? That's not nearly enough. So there's a way to structure all these things. I think if someone came in and said, I will guarantee you 8% next year if you invest with me, run. Would be my first instinct. To have a more structured product that has more, let's say, nuanced or specifically organized covenants in a financial and legal agreement makes a heck of a lot more sense. And there's a lot of different things too. Like you can't just do 8% and then I get everything else. Okay. You could. Here's the ultimate thing. Here's the ultimate thing, and this could be impressive to your clients. All of this is negotiable. Okay? So you say, okay, let's work this out, you and me. Okay? I have overhead to provide you a service. I'm not worried about me getting paid, my personal net worth. Wayne McDonald's fine. But my secretary needs to get paid. My lawyer needs to get paid. My accountants and my auditing firms, my compliance people, they need to get paid. This is just the cost of doing business. Okay? So me and you. So the first order is I have to collect my 2% just to provide you with the service. And none of it goes to me personally. It's just the firm. We have to agree on that. Okay, great. Next thing. How much do you need to live? What is the income you need to eat every year? I will push that forward as the prime number one objective, that you get that. And now you can sleep at night. Maybe not with certainty it's going to happen, but with almost certainty, with unbelievable probability. Even in the worst case scenario, this is likely to happen. What is that number and what is sleeping at night worth to you? Because remember, what I'm doing is now I'm assuming your risk so that you can sleep at night. What is that worth to you? And we negotiate. And we say, okay, well, your number is 8% a year. Okay, let's just say of the 10 million, they need 800,000 to live. Okay, great. So I'm going to guarantee you the first 800,000. Okay? But there's a cost. So if I'm going to give up all that front end money, I should be able to get some more reward for that. You see? So let's talk about that. If I'm going to give you all that money up front before I even get, right? Okay? That kind of stuff. And so then you work on that. Okay? This is one way of doing it. Another way of doing it is, what if the market is up 40%, or what if you produce 40, they get 8, and then you get some number, but you have a banner year. The client's not going to be happy, by the way. You can't have it structured so it's all about you. The client's never going to be happy if they earned 8% and you earned 14% because you had this killer year, and somehow you just got paid a monstrous amount of money. They're going to say, dude, how much of that was your alpha versus the market just went up? And why are you making more money than me? I'm the client. Aren't I supposed to collect the, right? So then you can have look backs to say, well, in this case, so let's say, let's say now you get the next 8%. So now you're splitting this 50-50, which is very handsome. Then what happens on the banner years? If, now you're 16% in, but you got all this, right? That's why you can't have it all. So you say, well, then we can look back and split the next 80-20, 80% to you, 20% to me, and all that kind of stuff. And now you have to do look backs or clawbacks, like what happens if in 1 year you only produce 6%, okay? And in a year or two, you produce 12%. Do you have to make up the 2% you didn't produce the year before you get paid, plus the 8%? You see what I mean? So now you're only splitting in the waterfall after that, the 2% that's left over. You see all these complicated nuances? But this is how you protect your client. And you should be able to sit down and break this down. Oh, these are your concerns. These are your needs. Let us address the legal contract to protect you so that we as a partnership can achieve your goals. And still, I get compensated fairly for what I do for you, right? And now you're organizing all of this in a clear fashion. And the lawyers are going to be like really impressed. You're like, wow, you got look backs and clawbacks, and you got this amazing waterfall, right? And you're like, this is really interesting how you structured it. And I'm like, yeah. Or you can say, give me your money and I'll guarantee you 8%. How are you going to get the 8%? Well, we don't know. We're just so confident. I'd be very careful, right? Any guarantee in a financial investing and trading scenario, I would run from that. It just doesn't make sense. Or you say, okay, well, I'll tell you what. I'll give you my 10M. Okay, and then what? You put 800,000, your 8%, in an escrow account. Okay? Plus, every penny you lose, if you lose, you have to pay that too, right? Because you guaranteed 8%. What's the likelihood this person has at least, let's say, 20% decline, so you're like, okay, there's 2M of risk, plus the 8% they guaranteed you. So let's just say you say to the person, okay, I'll give you 10 million of my money, but before you do it, you need to put 3 million in an escrow account to guarantee I get my 300,000, or sorry, my 800,000, my 8%, plus any a provision to protect me from a drawdown. Because, right? Do you see that? Like, do you understand, like, that ain't going to happen? Because the person guaranteeing you doesn't have any money. Do you understand how, like, right off the bat I said it stinks? Something's not right here? There's no way someone's going to work for you a whole year and guarantee you upfront in a market that they, right? And then guarantee you 8, which means a 20% decline plus the 8. They're looking at 30%. If they had that kind of money, they wouldn't be asking you for money. Like, it's just terrible. It's such a desperate move. But I say, well, let's make sure you get paid first. I won't guarantee you 8%, but let's make sure you get paid first. But if you get yours, I should get mine. Do you agree? Do you guys see how that's better? A wise, intelligent investor, someone that is a self-made millionaire, that knows business, knows risk, knows reality. They're probably very clear on reality. You explain logically how the agreement you guys work out together benefits both of you. Holy smokes. You got a friend for life, as long as you can produce. And the one day you don't produce, you're out, you're fired. Okay? Not allowed to hang it out with their daughters anymore. You're out. You're pushed out of the circle of trust. Okay? But anyways, I hope that was food for thought. It's interesting. If you're interested in, structuring deals, Harvard Law School is probably pretty good. So I'm not sure how we got on that, but look up look backs, clawbacks, waterfalls, benchmarking. You might want to Google some of those and just kind of put them together. How many people here are interested in those types of topics? Structuring deals, organizing your hedge fund, working with customers and clients. If you pay for someone's lifestyle for years and years and years, they're going to love you until you have a bad period. And then you're out. Mm-hmm. Cool. So we could put a couple of books in the book club in about that. I'm assuming some of you guys are interested in real estate as well. I'm not sure how deep in finance we need to go, but there seems to me that you should have a background in that. I've done multiple classes on real estate. Yeah. Because remember, to me, it's not a house or an apartment building. It's just income. It's an income stream. Why do you buy an apartment building? Because of the potential for asset appreciation and the income stream it provides through net operating incomes and eventually profits, right? Cool. There's an income stream attached to it. Well, why would you invest into ExxonMobil? Because of the potential for future asset appreciation, but also because they pay you nearly 10% in dividends per year. Oh, there's an income stream. How cool is that? Okay, and there was a time when a bond, when a stock, and when an apartment building were all valued in the same way. Future value of money plus asset appreciation. Now, things are a lot different, but the fundamentals, I think, the fundamentals of finance are still the same. Flow. And what is it that we trade, guys? Flow. Flow of what? Money. We trade the flow over borders, but inherently, when you analyze the value of a stock, analyze the value of a bond, analyze the value of an apartment building, or whether you should invest as your corporation, whether you should invest into building a factory in Vietnam or Malaysia or China, well, you still have to do the calculations and come out with the future value and look for the best relative opportunity. Relative meaning one versus another, and then the money flows. So all we do is money. So what is money? Money is trade. Money is investment. Money is moving. And there's generally rationale behind it. And sometimes the rationale is freak out emotions. But it's human behavior. And so once you understand finance and economics, right, then the next thing is to understand the human. Because they're making decisions. The money doesn't flow on its own. Someone has to make a decision. Rational or irrational, a decision is made and the money moves. So once we put all these three things together, we have a chance. Okay? You say harmonic, I say Newtonian, meaning it's a machine. Harmonic seems more like waves or right? To me, it's a machine. It's a giant machine. Absolutely giant machine. Okay? Oil goes up, Norwegian crown goes up. Done. Why? The cogs are connected. And that's how I look at it. Now, I know there's some behavioral finance in there, but once you understand the behavior of the people in the marketplace, then you know which direction the cog will spin. So if oil goes down, I know which way the Canadian currency, not the economy, the currency will go. I know, right, on the short term, it's the currency. On the long term, it's the economy. But I also know which way Norway will go. I probably know which way the dollar is going to go. I probably know which way the yen is going to go. I probably know which way gold is going to go. I probably know which way Bitcoin is going to go. And you're like, oh. So that's why I see it as clockworks. So my wife bought me a watch. Do I have it here? No, a handmade mechanical watch. Amazing when you look at it, right? Just amazing. It's cool because there's no brand. Literally, the watch was made by people. So anyways, it's just amazing how all the pieces work, right? And this spring turns that cog, and that cog turns this other thing. So it's got every time zone in the world, which is pretty amazing for a mechanical watch, right? All the complications that are inside. It's pretty amazing. But the thing is, it works with precision. And the precision might be like, let's say, to some accuracy, but it's an automatic watch, so you don't buy it because of accuracy. But it moves with logic. This spring will, right? The spring will move based on tension in a way that's calculable, which will then push this lever, pull that hammer, or turn this cog exactly in a logical fashion. Okay? And that's how I see the market. I look at this watch now, and it's got all these time zones from all around the world, and I see the universe in there, our trading universe. Okay? This happens, and now I got 9 trades. And that's what macroeconomics is all about. From that, if you assume the cog is going to turn and something is going to happen, now we use technical analysis, and it simply answers the 2 questions. There's only two questions that technical analysis, maybe I could say it in English. There's only 2 questions technical analysis answers or addresses. Is this the right price? Okay? The answer to that could be yes, but that's not a trade. The second question that technical analysis addresses is it the right time? Okay? So I look at this Aussie CAD and I'm like, yeah, this is the right price. 97.66 is very logically likely to be a sell zone, but not now. But I think eventually it's going to be beneficial for you to know the cogs. And then once you got that figured out, I'm going to have to teach you how to manage a fund. And I hope you can see that the Forex trading part is by far the easiest part of that career path. Trading everybody in your industry, all your competitors, when you start your hedge fund and you go out there, every competitor is profitable. And they've been doing it longer than you. So how are you going to compete? That you're more profitable? Oh, that stinks. Oh, that you're going to guarantee them a result? You're going to get... That stinks. It reeks of desperation, right? So how are you going to compete? Are you taller? Are you better looking? Or maybe you know your stuff a heck of a lot better than your competitors. You understand? And over time, as years become decades, you will be, without question, the person and team that people turn to. If you can sit down and structure, right, create a legal structure, piece by piece, that benefits your clients, but also in a logical, intelligent fashion that makes sense to somebody, because you were able to explain it and say, oh, I see what your goals and objections are. Let's try to fit all of this so this works for you in the right ways and still works for me, and we can organize this, and this is all custom made. This is all about us, our partnership. And then some other dude comes up to that client of yours 5 years into your relationship and says, I can make a lot more money. You're like, no, I'm fine, son. Thank you. Oh, but I'll guarantee it. I'll guarantee it. No, we're good. My family's taken care of. I got somebody. Right? So think about that. Being a successful trader is the easiest part of the business that might be in front of you. So now's the time to become well-rounded, technically and fundamentally. Like I said, you shouldn't only be a swing trader. You shouldn't only be a scalper. Instead, you should learn everything and become a master of your domain. Yeah, me too, Daniel. I hope your credit card works too. All right, cool. So peace on earth. May the pips be with you. May our profits be above average. Sorry, we're just hanging out here. So I don't know how many hours it's been, almost 3 hours. So that's cool. So thanks for hanging out with me on a Tuesday. Peace on earth. May the pips be with you. May our profits be above average. Remember, visit fxbootcamp.com. If you're already a member of fxbootcamp.com or used to be a member of fxbootcamp.com, see, the point is I want to make sure you've watched all the training videos. If you've already watched all the training videos and you want to join me, a couple of times a week in my group, please visit fxbootcamp. Or no, email me. Email me. If you used to be a member, even if it was 8 years ago, if you used to be a member, just email me, wayne@fxbootcamp.com. You can rejoin at $99 a month or $900 a year. Pretty simple. From that, maybe in a year or two, when you really got your technicals down, you're really good at setting up day trades and swing trades and position trades, you get a better idea of seasonality and all these things. We have another track of professional traders. There's dozens and dozens of people in the professional track. To get into that track of people learning how to trade Forex successfully, there's examinations. There's a trial. You don't try us, we try you. It's an examination. And on the very last day, the final examination is open up your MT4 and make 10,000 pips in a month. And if you can't do that, you're fired, you're not good enough. We're not even interested. Why waste the time? Think about that. And we track it in real time. It's all recorded, every trade you make. You get hardly any drawdown allowed. You're only allowed a certain amount of risk, and it's very small. And you got to make 10,000 pips in a month. You can't do it, we're not interested. You're not good enough. You're not even close. And the interesting thing is the people that pass are usually closer to 20,000 than they are at 10. But the thing is, if you're still stuck at 20 pips a day, 10 pips a day, you're never, you're not there. No, it does not. So we pick a month where it does. Marina, no, we're not saying you should be doing 10,000 every month. No, this is an examination. This is a test. So we say, open up your chart to this particular month on this particular year and trade the way we've taught you. And if you can't do it, you fail and you're out. You'll have to pay the money over again if you want to take the test again. You fail, you're out. We set you up to win, of course. But if you can't do it in a winning market, oh my God, what the heck are we going to do, right? Yeah. No. It's part of the examination. At the end of learning how to trade properly, we take you through the training course. And then we're like, okay, now go do it. And by the way, we are going to track you. The Hawthorne effect is important. The Hawthorne effect says, when a subject knows they're being studied, then the subject changes its behavior. So we just say, okay, you know how to trade? Yeah. I took the course. Really good. Good. Open your chart. We're going to watch you trade by trade. We're going to watch your drawdowns, your risk levels, every single pip, every single trade. It's all being recorded. And if you can't do it, you're fired. And if it takes you too long, you're fired. If your drawdown's too big, you're fired. Too many losses, you're fired. Now go. And that's called the real world. All right, cool. I love you, big, but I got to jump. This was real. Oh, woo! Best Tuesday of the week. I'm telling you. Amazing. So I'm going to be here tomorrow, Wednesday, and we're going to probably do very much of the same thing. Technical and fundamental analysis. Make sure you like, comment, subscribe. If you loved what I talked about today, what did you love? If you hate what I talked about, what did you hate? If you think I'm an idiot, why specifically am I an idiot? Just put it in the comments. And I'll see you tomorrow. So once again, peace on earth. May the pips be with you. May our profits be above average. And happy holidays. And I'll say it a third time. Peace on earth. Goodwill to all. I've been saying it all year for many years, and I believe it.